that is Target earnings. The retailer reporting better than expected results. Earnings per share of $1.47 a share on revenue of $17.78 billion. Target also raising its forecast, driving stocks higher. Joining us right now to talk more about that, the Marks Group president, Gene Marks. Gene, good to see you. Thanks so much for joining us.
Good morning, Maria. Good morning, everybody.
Your reaction to these numbers and basically the outlook for retail right now from your standpoint.
Yeah, you know what, Maria, I mean, look, it's no surprise. We're having a really great economy, and retailers are benefiting from this. And you and me and a lot of our viewers are going out there and spending money, and we are seeing a lot of retailers are benefiting from this economic surge. I mean, payrolls are slightly up as far as earnings are concerned. Consumer confidence is high. Small business confidence is high. So let's look at Target. Target is one of those retailers that are really doing something right, Maria. I mean, they're learning, and they are adapting, and they are learning how to evolve in an e-commerce world. Walmart, Home Depot, some of the other smarter retailers are learning all about, click and pick up, items. And what Target is doing is they are combining a lot of their e-commerce operations with in-store operations, and that combination is really working for them. They're not the only retailer doing that, but as we can see, they're really succeeding at it.
So is that the main takeaway, in addition to the consumer being a bit stronger, that retailers today have adapted to a new digital economy?
Yeah, I mean, the smarter retailers are looking to do just that, but then they're also doing a little bit more. I mean, Target itself is reinvesting. So, I mean, they're planning on spending about $7 billion over the next 3 years to refurbish their stores and also redesign their stores as well. And they're looking at younger customers as well. I mean, Generation Z is predicted to be soon even more in numbers than the millennial generation. And these kids are going out there and starting to buy. And, as a result, firms like Target, Nordstrom, even Walmart are coming up with more branded and unique type of designs. Target themselves, they just launched 3 new brands that are aimed at younger generations, 2 for clothes, for men and for women, and then also for technology as well. That's what retailers have to do to survive and to grow over the next few years. They've got to separate themselves from the likes of an Amazon, where it draws customers into the store to get unique type of products that they can't necessarily get online. And the good thing about that is those products themselves, they come with higher margins. All of this investment that the retailers are making right now puts pressure on their margins. So the only way they can make that up is by selling higher end type of goods. Clothing is one of them. On the Walmart side, I mean, they're expanding their organic foods and their groceries as well. So they're learning those come with higher margins as well. That, I think, will make up for a lot of the investments that some of these retailers are making to catch up, with the e-commerce giants.
Is there still too much box stores out there in terms of the malls and everything? Are we still going to see more closures on a lot of these companies in terms of existing stores?
There really, I mean, there's absolutely room for consolidation among the malls themselves, and we saw a huge spike in closures just in 2017. Although closures this year are predicted to be a little bit less than what they were last year. The malls themselves are recovering a little bit by looking for outside tenants to take over non-traditional tenants like government agencies and non-retail type of stores. But the retailers themselves, there is mall traffic that has been coming back, and I think that's also reflective of a stronger economy. But I do get concerned when I look forward. I mean, some of these retailers like Target, like Lowe's, who also released very good earnings this morning as well, Home Depot, Walmart, they are adapting to the economy, and that's an easy thing to do, guys, when the economy is going so strong and a lot of consumers are out there spending money.
Yeah, but they had to start this much earlier, though, right, Dagan? I mean, they had to start and adapt sooner than like today.
Right, and it is, Gene, to your point, it's that these retailers know their customers, and they're trying to send that message to those customers. We know what you want. Here it is. Because quite frankly, something that very few people talk about, when you go on Amazon to buy even basic products, it is like trying to find a diamond in a sewage lagoon. It is horrible the way that they push information at you. They give you all these options. That's not what Walmart and Target are doing in their stores. They're saying, we know you. Here's what you need. And it's smart retailing.
It's funny. Yeah, that is the holy grail of retailing. So with all of the choices that we have when we go out to shop, it'd be really nice to know if our retailers know us that much better and can make recommendations to us. Look at Walmart. I mean, Walmart just announced last quarter they did a big strategic investment with Microsoft, where Microsoft is now going to be hosting on their online platform all of Walmart's online assets. But more importantly, Walmart is going to take advantage of a lot of the artificial intelligence technology that Microsoft offers. And that's what smart retailers are doing right now. They want to know more about us even before we buy so they can make suggestions. And the big thing that a Walmart and a Target has that an Amazon really doesn't is they've got thousands of stores all around the country. So if we do find something that we really like, we can go out to a local store and just pick it up. And Amazon is faced with significant logistical problems that, I think a lot of the click and brick retailers that are out there, they can have a leg up on the Amazons and the eBays and the Alibabas, the online retailers.
Yeah,
so as long as they stay ahead of us, it's a big advantage.
You make a good point, because there's quarterly earnings for the major brick and mortar companies like a Walmart, like a Macy's in the rearview mirror, but Gap is still set to report. They report tomorrow. What's your outlook there? Is Gap also adapting?
Gap is doing their best to adapt. Now, Gap is in a little bit more of a funny environment because they're clothing and they're trying to target themselves more to a younger audience, and that audience can be very, very fickle. So Gap itself has struggled, although they are making investments and trying to expand more, particularly online. But I think that what they are dealing with are the same challenges that the Macy's and the Nordstroms and the Walmarts are facing, which is, again, how to get their, more online traffic while still keeping a balance with their brick and mortar. I am confident that Gap is going to figure it out, but they definitely have big challenges.
All right, we'll leave it there. Gene, great insights as always. Thanks so much for joining us this morning.
Thanks, guys. Take care.
Gene Marks there. Coming up, MTV hitting a new low. Stars turn on the president.